We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up OLED. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle. Price action is within that second last candle, so that market's consolidating, meaning it's working its way sideways, so we're waiting for the breakout to the top side or bottom side. Current price is sitting at 148.63. If price action pushes up, it can tag that high area of red and green, which would be near the numbers of 229.21. Price action work its way down. It can head down to that low area near the numbers of 3.86. And let's place that midpoint in the middle. And let's also add second level highs and second level. So second level highs would be at 158.40. So if price action pushes up, it can head up to that top of that price action wick and break out of that area to head up to new highs of structure. If price action drops down, it can head down to, as I said before, 110.06. If it drops down further, it could drop down to second level lows at 59.00. So let's take a look at what patterns being formed. So as I said before, price action, when it's 12-month time frame, being a bullish green candle. So price action could be pushing off the support of that midpoint to push up further. If so, when the market through that midpoint with the huge bullish green candle, the market broke, came back to retest. So that's identified with the red candle, first leg, second leg, third leg, and then we're looking for price action to engulf the second or the following candle to engulf the second last candle to push that market up. So as we're walking down the time frame, we taking a look to see what's happening. So we do know that price action has tagged that second level highs with the price action wick, lost momentum. So it may identify as a break and retest. So price action could be retesting the midpoint, which would be the midpoint of the second last candle, which would be near the numbers of 135.25. So market is at a consolidation at the high area of the second last candle to market. If price action drops down, where's it headed from? So you're looking for the highest green and red. So when the market did tag that high green and red of structure, that's considered the first leg. Market came down for the second, came back to retest second level highs, which will be the midpoint of that first and second leg that we created of that M pattern. And if price action doesn't break through, and if it drops down, market's coming from a double top. So we have a first leg, second leg, third leg, and market could drop down with the bearish red candle and break through unless it consolidates. And if it consolidates, that means we will have another price action candle within the primarily the third last candle, which we're looking for the breakout to the top side or bottom side, or that market can't consolidate sideways until the market is broken to the top side or bottom side. Walking down to the 6-month time frame, price action 6-month time frame is reading as a bullish green candle. So we can see that price action is pushing up, coming from that support of the second, third leg. So when that market created that overall structure, pushed up with the bullish green candle, we can see that first, second, third, and market's trying to work its way up. So it's trying to work its way up, as I said before, through second level highs. That's what we're looking for, the break and retest of the SR line, and that will be near the numbers, as I said before, of 158.40. But until then, we're going to keep looking down the time frame to see if that market's pushing up further, what patterns being formed in that area. So far, we do know we're in consolidation, price action within the third to last candle on the 6-month time frame. 3-month time frame, price action reading as a bearish red candle. So it's a bearish red candle spike down to a low. So it's retesting the second to last candle midpoint. Also, it can be read as a retest to push up further. That means it can follow up the bullish green candle unless it drops down with another bearish red candle, unless its price action become active and push that market up or down. But so far, what is reading as overall structure, when the market pushed up, we do have that first, second, third, fourth. This is the retest. Now we're looking for to see if it's going to push up bullish green candle or drop down. If it drops down, that means it's coming from multiple touches into that zone area or tag near that zone area. So at that high, we have a pattern of that first, second, third, fourth. Okay, market retest, finally pushed down. So when the market finally pushed down, it closed out the M pattern. So even though we have a retest, market still pushed. It's still identified as an overall double top. So it's first, second, third, fourth. So double top, even though we got the retest, and then the market came back to retest with the price in second to last candle to that M pattern, which is the previous side. And we're going to see if that market's going to drop down with another bearish candle. But no, we do know that we are in the consolidation of the second last candle in this 3-month time frame, and it could be reading as a retest for that market to push up or push down. Monthly time frame reading as a bullish green candle. So we did receive that retest. Now we're going to see if that market is going to break out. Price action, what happened at the low? So what happened at the low is going to create the pattern that's formed at that midpoint once that market broke. At the lower price, we did receive the first, second, third, fourth retest. Market pushed up once. So it's an overall push. So overall, it's first, second, third, fourth. Even though we got the retest, market came back down to retest that overall pattern of the double bottom or double bottom in a retest. And then we're going to see if it's going to push up because price action did come down for the retest, as I said before, with the second last candle, and price action could be the push and breakout. But we are looking for price action to break above the second last candle to push that market out of the SR line. So we can see that market is between the SR lines of 158 and 135. So we're looking for the breakout to the upside or downside. It's the consolidation so far. Walking to the weekly time frame. So price action on the weekly time frame is a bullish green candle. So to break down what's going on in this area, market, remember, this is between the SR lines, so it's consolidation. So if you think about the having a high and having a low, create the midpoint. What did price action do? Now you ask yourself, what did price action do? Price action has created a what? A break of the midpoint. And where is it coming from? The low. At the low, what pattern did we receive? First, second, third, second last candle was a retest. Market price action pushed up, broke through the midpoint. Now we're going to see if it's going to follow up the retest to push up further, or is the bullish green candle, or that market could be denied and drop back down. So walking to the daily time frame. So price action on the daily time frame reading as a bullish green candle. So it did break, as I said before, the previous side, break the midpoint. Where's price coming from? Price action is coming from that second to last candle wick to the high and to the low. So now when we read the market, we can see what happened at the areas. So overall, price action, where's it coming from? Coming from a first, second, third, fourth. Now is another, now it's coming from an overall double bottom. We have another double bottom, but it's consolidation. So you can read that as another double bottom. So if you read the market, it'll read that double bottom, double retest, market pushed up, or you can read it as double bottom, overall retest, because Y is in the zone. So this is all consolidation. So whatever patterns, it could bounce up and down for a triple bottom, quadruple bottom, 5 pushes to the bottom, doesn't matter. Overall retest still, and the market pushed up. Broke through the zone, so we don't see a retest yet. Broke through a major area of the midpoint. This is where we're looking for the retest. Now it's going to retest the SR line, work its way up, or it's going to retest the zone and it still work its way up unless it drops down and go through the zone. And it can, and if so, it's coming from the midpoint, and we'll talk about that. See if we can talk about that on a 4-hour time frame. The midpoint would be a little bit above the zone. So then price action came back to retest the high. So we'll identify as first, second, third, fourth. So we have a double top. Market came back to retest that double top previous side. If it drops down, and that means if we perform a pattern with a bearish red, identify as coming down to engulf at least the second last candle, head back down to that zone, or the midpoint of the second last candle. Market could work its way down from that overall triple top.